Hey everyone, welcome to another weekly stock video. So every week I send out a newsletter which has four stocks, and these four stocks are basically picked after some good research, especially based on technicals and fundamentals. And I look for stocks which are, which have the potential to give a decent returns in the short term and probably, much better returns in the long term. Now, after I cherry pick these four stocks, I send out a newsletter which has interesting content, especially if you're working and you don't have the time for markets, and if you're looking for some concise, short inputs on how you should be treating a portfolio or how you should feel about or how the markets are doing, then this newsletter is the perfect newsletter for you. And if you haven't subscribed it yet, do subscribe it right away. The link is in the comment section. Okay, so this week I also mentioned I did mention why Nifty is going so high, and just Nifty has just been going up and up and up after every breakout, and I think we are still much. I think there's still some time left before we make a top, and also I'll cover four stocks every week. We'll discuss that in detail, and that's the video. This is the video for that, and also I discuss a series called Trend Following series, wherein I help people to understand, how to invest in stocks, how to trade in stocks, and how to make the best use of strong trends. And for this, I've been writing a series of articles, and this is the 16th article that I've written, the 16th newsletter, and it's been 16 weeks, which means I've been writing newsletter for 4 months now, and I've been enjoying this. And if you're also enjoying reading it, do let me know in the comment section. But if you see, the blog has developed very nicely. This also shows how small effort every week, regularly can bring up something as beautiful as this blog, right? And this blog, this week I've covered the rectangle pattern, and I hope you read it. And if you do have any doubts, let me know in the comment section. And also I've covered the inverted head and shoulders, and these are the best patterns that I like to trade in markets. Okay, so also before we jump into the stocks, this is the newsletters sheet where I track all the stock ideas, and you can find all of them here with the stop loss, with the entry levels, and what is the current return that you're having, what is the current RR. Now it's up to you if you want to book this book your profits. I'd leave it completely up to you, but I do update the stop loss here. So for example, we are sitting on a 2.4 hour trade in Stovecraft. Even though it's up 20%, which means we risked 1 rupee, we made 2.5 times that money till now. But whereas we also have other stocks which are 44% of the same RR, which means we had a higher risk there, and with relation to the risk, the reward has been just 2.5 times, right? So it's all about the risk and the reward in markets. So if you're able to understand that, and if you're able to invest based on that, then you would have opportunities to make really good money in markets. So let's jump into this week's stock videos, right? So the first stock that this week I covered is HDFC Asset Management Company, or HDFC AMC. It's a beautiful stock. Technically, it's an excellent stock. I think it's one of the best stocks and the finance space. There are many other stocks as well, but don't get me wrong. But this is also one of the best stocks in the finance in the investing space, and they are a very good company also. Okay, so the stock was listed back in 2018, and then we had IPO base breakout. So this was the base breakout here, and 2000 from in 2019 from 1600 we went all the way up to 3000. So that's almost double in few months. And then we kind of had a dip after the COVID crash, and we had a symmetrical triangle formation. Now, a symmetrical triangle formation is nothing but a kind of a spring where the price contracts over a period of time and then the price expands, right? So this was a price contraction, and then we had a price expansion. Now, that's how markets are, right? So markets sometimes, the price of the share goes down, sometimes it goes up, but the moves up is what you have to focus on, and these are the patterns that you have to focus on to catch those moves. Right, for example, a base breakout, a beautiful 100% move here. Here again, we had a 30% move. So returns do change depending on the patterns, right? But this was a nice breakout, and also we had a higher high here, and we broke out in November and we went all the way up. And since then, we've been forming a nice base, and it's the 8-month base. And I think the stock is kind of getting prepping itself to head higher from here, and that's the reason why I covered the stock. It's a nice pattern. On the weekly charts, it's a beautiful setup to trade, and it's just a continuation pattern. If this is a breakout, and that's a continuation or a consolidation here, and if you have a breakout, that's a continuation breakout. Now, a lot of people I've seen have drawn the trend line here, which is also fine, which is just totally fine, and they see a breakout here, but at least that's not how I'm looking at it. I'm looking at the breakout here first, and then this is a consolidation, and then we have a continuation breakout. So that's the first stock. If you want to look for the targets, go back and check in the newsletter. But that's the technical reason that I covered. Now, what is the fundamental reason that this stock is bound to do well, right? So the fundamental reason is, first of all, this company is a debt-free company. It has a very good operating margins at 80%, which means if they have 100 rupee sales, they make 80 rupees operating profits. And it is a very good bet even for the long term, and it has an excellent ROCE, which means if the company deploys 1 rupee, probably it's making very good money out of that 1 rupee which is deployed. And the operating margins have grown from 57% in 2018 to 80% in 2021. So that's the primary reason from a fundamental perspective. And the technical perspective is that we had a nice breakout and a consolidation now, and again probably this breakout is going to head higher. So that's the first stock, and I know many of you would already be holding this company since the IPO, because this is a very good company to hold. And if you are holding, and if you have any of the reasons apart from the reasons that I've mentioned, do let me know in the comment section. I'd be happy to discuss that with you. So the second company today we are looking at is ICICI Lombard General Insurance Company, which is also from the finance space, but this is more from the insurance space. So again, a beautiful setup here. So ICICI Lombard. Okay. So here I'm going to the monthly chart just to show you this channel, right? So this stock again was listed in 2018 or 2017, and it's been a beautiful uptrend, and this stock would have already given decent returns if you've been holding since IPO. It's already up almost 2.5x, right? So 650 to almost 1600. So yeah, not 2.5x, probably lesser than that. So right now, what the stock is doing, it's kind of having a breakout out of this all-time high. The previous high breakout was in the month of Jan 21. We kind of reversed and went all the way high, and we're kind of consolidating, and now we are prepping up to move higher now this stock is in a nice parallel channel, and until this parallel channel doesn't break, you can also consider this stock for long-term investment. So probably this can just keep going higher like this, or it can go and break out from here as well. So it's a very good point to enter the stock right now. The risk is very less, and probably you can have a good returns in the coming years. Okay, so that's the second stock. That's the technical reason for the stock. And just going to the weekly charts, you would see that this is much better. You can see that this is probably another symmetrical triangle which we are looking at on the weekly charts, right? So that's probably another symmetrical triangle. Now, from a fundamental perspective, most of us know this is a very good company. It's part of the ICICI Bank group, and it's in the private insurance space. But one thing that I've noticed here is FIs have been continuously increasing the stake since it was listed. In fact, you can go and check the numbers on screener.in. The numbers are really there, and you can really see that numbers. And it also had a very excellent financial year 2021. It had increasing sales and profits, and the operating margins also increased from 12% in 2017 to 16% in 2021. So that's the fundamental reason. If there's anything that I'm missing from a fundamental perspective, I'd be more than happy to learn from you. Do let me know in the comment section, and if you're investing, also do let me know. So the third stock again is from the finance space, and this is Angel Broking. It's a very new company in the markets. It was listed just this year, and it's in a phenomenal. It has had a phenomenal run since the IPO base. So since it was listed, it never went below that listing price, just for a few days probably, but since October the stock has more than gone up 4x, right? Since from the lows, if you consider, it's almost 6x from the lows. Okay, but for us, we always focus on technical patterns. We don't want to buy the bottoms, we don't want to sell in the tops. So it had a nice base breakout here again in the month of May, and since May it also has gone up 3x from 400 to 1200. But if you see, there's a beautiful trend line support which is again providing support here, and I feel that this consolidation, it's just a consolidation after this move from here, right? From 800 it went to 1200, 1400, and it's just consolidating. And I think that this consolidation is over, and probably we are heading higher towards levels of even 1500 odd levels in the short term. And again, it's a fantastic company to be invested in, probably even for the long run, who knows, but always keep a stop loss, and that would save you from losing much of your capital. Now let's look at the fundamental reasoning. The fundamental reasoning is simple. It has been posting excellent numbers in the last few quarters, and it increased its revenue by 50% from 2020, from 748 in 2020 to 1290 in 2021. That's a 50% increase in sales, right? And also its profits kind of went 4x from 114 crores to 410 crores, and the operating margins increased by 50% from 24 to 36%. So if you're looking at such a company and you don't invest, I think that's I think probably might have other companies, but after looking at such a company, I would at least not miss investing at this point. So that's the fundamental reasoning from my perspective. Again, if I'm missing something, do let me know in the comment section. I'd be more than happy to understand your perspective. Okay, the fourth stock is from the commodity space, Gravita India. Now this is again another interesting stock because this is closing. It's almost close to a multi-year breakout. Now, when you mean multi-year breakout, here it is from 2012. The stock has literally not done anything since existing. It's just been going sideways. So if you bought in 2012, you're still sitting in losses or probably in minor profits, right? But this stock is close to a multi-resistance, and this is a perfect horizontal resistance, and a breakout from here would mean that the stock can even double or triple from this point, right? Now, again, just because I'm saying it's going to double or triple, don't just invest all your money in this and keep crying that the stock is not moving. That's not how it works. You need to probably allocate 5% or 10% or higher percentage if you understand markets, and then invest in the stock, right? But it's a beautiful setup. I think it has a very good potential. If it crosses above 210, 220, that would be a very good closing, and from there we can see the stock doing very, very well. Now, that's the technical perspective. If you think you have any other reasons, do let me know. From a fundamental perspective, even though say the share price hasn't moved much, the company has managed to improve its sales from 160 crores to 1400 crores, while the share price has not gone anywhere. Right, that shows why this share is probably undervalued, and also the profits increased from 12 to 52 crores in the same period. Right now, when the share price has not done anything, the company has done exceedingly well. There could be reasons why the stock is not moving. Could be some reasons, but I think that reason is right now probably not valid anymore, and it can probably head higher from here. Remember, this is in the commodity space, so usually stocks in the commodity space can do really well, and I feel this might also do really well going forward. So that's the fourth stock, and that's the last stock that I want to discuss today. So if you did love my analysis, I'm sure you learned at least something. If you did not really understand, some learning is also really good sometimes. But if you did enjoy it, don't forget to share this video with your friends. I'd be more than happy if you do share this video with your friends, and let's spread the knowledge that we have. And that's been my primary objective, and I'm sure many of you are learning from me. So let's spread this objective, let's spread knowledge, and let's share this video with your friends. And also, don't forget to subscribe to the channel, and don't forget to like this video as well. So I leave you here. This is just another stock video, and every week I do give another set of stock video, and we'll be covering more stocks in the future. And we're already 4 months with the newsletter, and we have 1600 subscribers. So also don't forget to subscribe to the newsletter. Okay, so that's it from me for today. I hope you're enjoying this video. I hope you're enjoying my channel. I hope you're enjoying my tweets on Twitter, and do let me know your feedback. I'd be more than happy to understand what you need and probably what I should be covering more to enhance and spread knowledge. Okay, thank you. Until I see you in the next video. Bye bye.